Welcome to the weekly edition of the Not Your Average Investor Show. Today is a special show because one of the biggest consulting firms in the world, would you call McKenzie?
I would.
McKenzie, maybe the biggest, maybe the most influential, right?
There we go.
Consulting firm in the world has recently released a study that is based on expert opinions, surveys, all the type of stuff that these bigwig consulting firms do about what the new real estate investing edge looks like. There's been a major shift. They've identified 3 key insights and essentially an 8-step framework of what leads to success for real estate investors. And we are going to break it down for you today.
That we are.
I'm your host, Pablo Gonzalez. With me, as always, the man that I affectionately like to call GC because he's got the genius concepts, because he knows how to generate cash flow, because he's the great host, and because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you today.
It is great to be here too, buddy. I feel like I haven't been here in forever.
I know.
Right?
And then we were so excited to go running as soon as you got back. We haven't run in like 6, 7 score and 4 years ago. And then I couldn't even run this morning.
Yeah, couldn't even run this morning. But you know what? We're here in studio. We're ready for an awesome show again. I've been away for 3 weeks in a row. We're back, baby. And I'm super pumped about this one. And we also have a reminder, right? Like this isn't just my time back. There's also 2 days left on the special incentive, GC. Tell people what they got 2 days left about.
Absolutely. So if you haven't heard, we've been talking about it for the last couple of weeks, 3 weeks here, but we have a very large incentive package that we're offering for new clients and current clients. And you guys have been taking advantage of it. So congratulations. We've been having the largest number of sales so far this entire year has happened in this month. And it's because of you all, it's
Not
because
surprised.
of this incentive package, and it's because it makes so much sense to take action right now, especially with this incentive. So I'm excited for all of you. What we're doing is we're buying down the interest rate for all of you who put properties under contract through the end of July. So 2 days from now, it's go time, guys. JWB is buying down the rate on your mortgage. We're doing that we're buying down the rate 3/4 point, which may or may not sound like a lot to you all, but it means a lot when you invest in a property and you hold on for a full market cycle. What this is going to do is bump your rate of return over 1 percentage point, which if you're investing hundreds of thousands of dollars, 1 percentage point over years and years and years adds up a ton. And in year one, what it does is it adds over $700 of cash flow to your bottom line. That's just in year one. Over 10 years, that's over $7,000 of cash flow by taking advantage of this incentive. So it's go time, guys. If you are a current client and you would like to add properties to your portfolio, simply reach out to your JWB portfolio manager. If you're a new client, get on the phone with us today. As soon as you're done listening to this call, get on the phone with us. Go to chatwithjwb.com and you can schedule a time to get on the phone with us, or you can just send an email to info@jwbcompanies.com. We will do our absolute best to help you acquire in the given timeline. And so I'm excited.
Yeah, I mean, that was a lot of words because it's a very, very valuable thing. I like to describe it as you have 2 days to lock in tomorrow's interest rates today.
Well done.
Right.
Yeah, what he said.
What we've realized is that most people are holding back because they're thinking, oh, our interest rate's going to drop. And, maybe they're a little bit intimidated for this like buy now and refinance later thing. But at the end of the day, what I think is genius that you and your team have figured out a way to do is you take that off the table. You allow people to lock in tomorrow's interest rates today. And what that means is not only do you get to buy now when everybody is afraid and knowing that when interest rates drop for the rest of the world, property values are going to go up, and you get to lock that in, lock in that low price, lock in that home price appreciation, but you also get to lock in the rate that everybody is waiting to buy. So not surprised that our community has taken action. I see some names in the chat right now that are here with us today that are some of the folks that have added properties to their portfolio. Not going to blow you up today, but if you want to identify yourself in the chat, feel free to, because what I also see is people identifying themselves in the chat for the thing that we like to do, start the show with every time. What is it, you see?
The roll call, baby.
We got the MVP in the house.
Mr. Lee Bishop.
Mr. Lee Bishop. We got our community manager, Joanna, in the house. We got the fairy godmother in the house. house.
Miss Jen
From
Filson.
Monterey, California. We got Mark Norman is back. Good to have you, Mark.
All right, Mark.
We got the patron Santorios of Northern Virginia.
Michael Santori.
The ringmaster.
Drew Barnell.
Saying good day, all. Back from Europe, Mr. Traveling Man. We
Billy Green.
Good morning from the boisterously Susurious Mountains of Colorado. Good to have you, Billy, in the house. We got the Shaw man.
Nadeem Shah.
Nadeem Shah. We got the Maven from the mountains of Denver.
Leslie Wilson.
We got Christopher Lee from Fernandina Beach.
All right,
Welcome,
Chris.
Christopher Lee. We got our user leadoff hitter today, batting 6th, 7th, something like that. Bottom of the order today for
Bottom
the
of
leadoff hitter.
order. John Henning.
It's all right. That just send the order around. Bat around. Bat around. We got the Man of Steel. We haven't seen him in a minute.
Vincent Barber.
Vincent Barber, our favorite smile from the Pacific Northwest.
Miss Pamela Myers.
Miss Pamela Myers from Seattle. Who else we got in here? We got our favorite Nathan Brunels, Aaron O'Neill. Into the Heights. Good to have you, Aaron. We got the 5 Fs. Our favorite our favorite flat fee fiduciary financial advisor friend, Kelly Barrafon. I'm not good at counting the Fs. I just pronounce the Fs, okay? We got our regulars, Gary and Rosalind Riley from Marietta, California.
We
We regard you. I almost messed up on that one. We got Le Messier celebrating the Olympics in Paris. Reggie Fonse from the Inland Empire of Southern California.
Oh, this is great. I miss this.
It's fun. It's so much better in
Studio
person.
is great.
Yeah, in-studio roll call is 1,000 times better than remote roll call, not gonna lie. So I blame myself for that. I love this. Okay, great roll call today. It feels like, as the fairy godmother says here, the gang's all here, right? Like
I agree.
I forgot. We've got the first family of the Not Your Average Invest Show, the patriarch, Ken, the matriarch, Carolyn. We salute you.
We salute you. You threw that one off a little.
I did. My bad. We got T from Nashville, Tennessee.
All right.
Yeah,
There we go.
Putting the T in Tennessee.
Is that a new
T.
name?
That's a new name. That's a new name.
T, welcome to the party.
Welcome to the party. We got the legend, the #1 referral source for JWB clientele, the man with an arena named after him.
Mr. Roger Voice.
Mr. Roger Voicenet. We got Danette Coleman is back in
All
the
right,
net.
Danette.
Good to have you from Maryland. Right on. GC, before we get started, we also have breaking news today. What are we breaking, GC?
We do. We have. So a lot of you have been hearing and have been asking about our special webinar series that we are continuing to do. We have done 3 or 4 of them so far.
Something like that.
Yeah, and so we have another one that's coming up this Thursday. I want to invite all of you to attend. This is going to be a great one. We're going to be talking about this idea of buying your assets today and how it's going to be a win, even if you have to refinance or you get to refinance later on, and really walking through why it makes so much sense to buy while rates are higher like they are today. This is a not your average take on how to take advantage of market dynamics, and one that we're going to dive into deeper on Thursday. We're going to bring one of our best friends along with us. John Siebert has been one of our lenders for probably over a decade now. Many of you have worked with John on your loans for your JWB properties, and John is going to be
some
there.
of us have worked on loans with John Siebert for their personal property.
That is true. You know John very well.
Hello. Save me 0.8% of a percentage point on my mortgage. So yeah, as we know, this incentive is drying up at the end of this month. So what are we doing? First day of the next month, we're bringing in John to explain the whole mechanics around if you're going to buy today, refinance tomorrow. We're bringing in our mortgage closer guy.
The closer.
The closer to explain the cost, the kind of like the process behind it. Obviously, we're going to have GC explaining the genius concepts of how it all works and all that good stuff. So it's going to be a great one. As we all know, you know, we used to go live on Tuesdays and Thursdays. We've heard from the community that they miss having a Thursday show every once in a while. It's just another opportunity to like hang out with us again. It'll mostly be tailored to new people, but we love having the community in the house.
Always.
Since you are such a useful resource for anybody that is debating whether or not to go on this journey themselves, right? So we appreciate anybody that can make it. Joanna posted the link for the webinar in the chat if you want to register and you want to hang out. I see Leslie Wilson registered. I see MVP Lee Bishop registered. Not surprised. And I see we got a couple new live listeners again. We got Ed Lowry,
All right.
new live listener, investor from Jacksonville. welcome to the fam.
Thank you so much for being here.
April Smith saying hello, everybody. That's a new name as well.
Welcome, April.
Welcome to the show, April. And Charity Graham checking in. A return.
We know Charity.
I mean, we know
Charity.
Oh, we know Charity. We know Charity.
Thank you all, especially the new folks. Thank you for saying hello, welcoming or being welcomed in the chat. It's a big first step, so we appreciate all of you.
Yeah, it's cool. It's cool. We appreciate you identifying yourself. Also, for the new folks, if you're just chatting on the default, it's only coming to like the host and panelists, so only us and Joanna see it. If you want everybody to see whatever your question is or whatever your genius insight is, you got to change that little box right above it to everyone from hosts and panelists, and that way you can chat with everybody. So I see more registers for the show. We appreciate you guys showing up for us. Now, without further ado, the topic du jour, as Reggie Fonse likes to say, it means topic of the day, GC. So this, I'm gonna put the article in the chat so anybody can look at it, right? But for anybody not familiar with McKenzie and Company, again, they're kind of like the category kings of business consulting. They hire people out of college, paying them an outrageous amount to give professionals big advice. And they put their resources behind this study about how success in real estate investing has essentially changed. They called it the new real estate and investment edge tech-enabled brand, CX, which is short for customer experience, and loyalty. And they do what they do, right? They use industry research, expert interviews, data analysis, compile this report, put it in a highly digestible thing. As soon as I saw it, I dove into it, send it over to GC because I think there's a bunch of really, really interesting things. And I wanna talk about essentially three things today, GC. One is the main shift that they've identified. Two is the three key insights of like how this shift is working, and then this like 8-stage framework of what they believe is the way to do it. Because, spoiler alert, as I read through this thing, I was like, oh, that's why they call you Genius Concepts. You've been doing this for a long time.
Well, yeah, it was really fun to read through the article and kind of not just think about where JWB is today, but think about our evolution. I think it was a really cool article because there are certainly some things that we were ahead of the game on. And then there are a lot of really great insights in this article as to how we can continue to step our game up as far as the tech side as well. So it's a really, really great article, and I would encourage all of you to read it.
Cool. So it's in the chat. We'll also link it in the podcast if you're listening at some point in the future here. But the big shift, right? The big shift that they identified, if you were to summarize it in one word, is real estate companies have gone from really valuing this idea that they have to prioritize the physical attributes and location, right? From location, and house, to customer experience through tech, data analytics, and strong brand and community. And that is essentially the thing that they're identifying that separates today the real estate investment companies that are winning, that are creating higher returns for people versus average run-of-the-mill people that like are the old industry standard. You see, when you hear about that shift, what goes through your head?
I feel it at a deep level. It means everything to me because the big thesis of JWB has been, listen, more people need to have real estate in their portfolio because we need to build a better retirement. So more people need to have real estate in their portfolio. And most people know that. But the reason that most people don't invest is not because of a lack of returns. It's not because of a lack of the opportunity to make money. The reason why most people don't have real estate in their portfolio is because the experience has been hard. The experience has not been enjoyable. And in real estate, the way you win the most is by staying in the game a long time. So the big thesis for JWB, our aha moment, 15 years ago when we went completely head over heels into this turnkey experience was that if we could take this experience of being a real estate investor and making it enjoyable, making it something that you tell your friends and your family about, well, we could really create something really great, something that could make a big impact in our clients' lives. We can make a big impact in our residents' lives. We could make a big impact in our community. So it was never for us about saying, hey, how are we going to take this return component and double the returns that we can drive for our clients? While we would love to do that, the big thesis for us is, hey, listen, the returns in real estate, they're already good enough.
Yeah.
The problem is we don't have access to it because it's too hard. How can we make the experience 10x what it typically is and still continue to drive high returns? And then, we can make the world a better place through real estate.
Yeah.
And so, but that CX, that customer experience, is the core of what the JWB thesis is.
Yeah, man. It reminds me of our initial conversations, right? I remember sitting around this room and you, me, Cody, and Kate, and us, really going hard at this idea of, the top of the website should say real estate investing made easy.
Yeah.
Right.
Yeah.
And it's been your message all along. I think as we have kind of had more interaction with our community, have more interaction with folks that are trying to make this leap and really diving into like the core problem here, we've also surfaced this idea that retirement stats are broken, right? Like you've had this like data point of people want to be in real estate, but they don't own real estate for a really, really long time.
Mm-hmm.
I think it was really easy to think that the main issue, and April's saying it right now, and this is an issue for people, right? Lack of funds to get started for initial down payment, and like that price continuing to go up.
Mm-hmm.
That is an initial obstacle, but you've always held true to the idea that like finding the money is one of the most solvable issues there is. But at the end of the day, what really hurts people is this idea that the moment you tell someone, oh, you know what, I just saved 80 grand. I'm thinking about using my 401k to put this much money into real estate. You're going to get people coming out of the woodwork saying, you know what, man, they're going to promise you all this stuff, but it really actually sucks. And that's why people aren't doing it.
Yeah.
So this idea that they've uncovered customer experience, like the right data that you can really count on, and this idea of community as like crowdsource the real information and the true contextual experience for yourself and make you feel like you're not crazy because you're about to do this, is like a key thing that is the reason why we now have a community that has I was just looking at this math recently, but what is it, like 2 people that have already generated over $2 million in wealth from real estate, like 16 people that have generated over a million,
Mm-hmm.
and something like around the lines of like 200 to 300 of folks that have, I might be wrong on this.
There's a Pablo curve in your numbers somewhere. I think it was
Yeah.
160 or 180 that have generated over $500,000.
Over $500,000, right? Well,
Through JWB investments.
through JWB Real Estate Investments, right? And those are all folks that show up to this show.
Yeah.
Right. So it's like they have figured all this stuff out.
Yep.
They're having experience. They have created an edge. So let's dive a little bit deeper into this, like from this shift into like what's making it happen.
Mm-hmm.
And I kind of want to go insight by insight, right? Enhance customer experience, data-driven decision-making, and building strong brand and community. Let's talk about customer experience, because that's where you first went to, right? Like that is the key insight. When did you and your partners be like, talk me through the aha moment for you guys?
When we first started, we first fell in love with rental properties before we really knew what the main problem affecting the world is. And the problem is access and experience in owning rental properties for most people. So we first fell in love with the asset, and we, built our own portfolio. We bought about 40 rental properties back in 2006 and 2007. So I was 23 years old with my business partners, and we fell in love with it, but we were 23 and we were so hungry to be successful, and we didn't have wives and families, and we put everything on the line to be able to do this. And so it was such a sacrifice to be able to own a rental property or to build a portfolio. So after we did this, we kind of took a step back and we're like, man, that's not exactly easy to replicate.
Mm-hmm.
And so there was an aha moment of like, wow, we want to bring this to the world. We want to bring this to folks to be able to help, but like, how do you replicate what we just did? We really need to deconstruct everything we just did to make it easy for others. So there was a moment there where it was like not just out of the box, easy to do.
Yeah.
We really needed to break it down. And then we also started to look at it from like what the normal experience is for owning real estate that everybody just has accepted for so long, and realize that it is not enjoyable by itself.
Yeah.
Right? You know, the normal experience when people use a real estate professional to go and buy a property still includes a lot of, you know, waiting. It includes a lot of taking your time to go and see many properties. It includes a lot of stressful offers that you put out. It includes a lot of rejections. It includes a lot of negotiating. It includes a lot of big numbers and working with people that you don't necessarily know have your best interest with lenders and title and insurance. And it's just for many, forever, we've just sort of accepted this is what it's like to own real estate.
Yeah.
And so we kind of looked at it from both of those perspectives of like what it really takes to have real estate in your portfolio it used to take a tremendous amount of just passion, sacrifice, you know, and then at the same time,
perseverance,
right?
Yeah.
And at the same time, the normal way of doing this that everybody just already accepts isn't easy to do either. So we just looked at that and we said, if we could meet somewhere in the middle, listen, not everybody is going to go and buy 40 rental properties in a year and a half like we did, right? You don't have to do that to be successful, right? But if we could make the experience, again, 10 times better than what normal real estate is, then we could really, really make an impact here. And so that aha moment of understanding both of those components created this space in between for us that we could achieve and meet and really, again, make an impact on others.
Yeah, I mean, you know, to me, you and your partners have always been like really intuitively sharp business guys, and seeing this like gap in the market of, hey, people want to do this, but you know, it's really, really hard for us to get to 40, you know, so how do we get people to 4?
Yeah.
Seems really, really intelligent. And you know, when I think of the history of JWB as told on this show multiple times, I think of the idea that you guys first had the insight. So you started thinking, well, we can bring properties to folks, right? Like there's a moment where, all right, we have 40, we can just kind of start building a company around also like acquiring it for folks. And you were doing that while outsourcing property management to people. And then you're just like, wait a minute, this property management experience sucks. So we're just going to have to build this out ourselves. And now, you know, I don't know exactly how long ago it was that you guys started property management. I'm estimating around 10 or 11 years ago, but you now have
2010 is when we started.
Pablo Math. You now have 6,000 homes under management. You have maybe the biggest single market property management company underneath, and your commitment to the client experience is essentially, we thought our business was finding properties and remodeling them, and now we've realized our business is actually property management, and we were willing to pivot our whole business model around that.
Yeah, the basis for why we were going to be successful was client experience. And if that is your North Star of how you're going to be successful, we quickly learned that we can't do that unless we control all aspects of the investment and become vertically integrated. You know, when we first got into property management, we weren't exactly excited about building a property management company. I mean, it's the same reason that you all hire us. You're not exactly excited about doing property management, right? We quickly learned, though, that our business overall was not going to be the level of success that we wanted unless we leaned in and we realized how successful property management was critical to the client experience. And when we did that, then we became very excited about it. And that's why we love it today. And now we've grown it to about 6,000. But that North Star is client experience. And whatever needs to be done to improve that client experience, it's on the table at JWB, and there's a good chance that we're going down that path.
True, right? Like the foundation is running your own property management company. The application of it all, I think, goes straight into like your core values of under promise and over deliver, and how you know, when I look at like kind of like the periphery of client experience, I realized early on that you all are really good at client gifting. Right? Like I've been given a couple of surprises myself, and I've seen it in other people's homes that have this stuff, and the different conversations I've had around under promising and over delivering with you of how you set up the kind of like from the sales process all the way through to like every touch point, you've advised me on my own business of, hey man, only promise something that you 100% believe that you can deliver and are pretty sure that you can do better than, and don't go beyond that. Because as long as every single touch point is, the biggest risk to client experience is not matching expectation.
Mhm.
And if you can continue to match and or exceed expectation, people will continue to trust you more,
Mhm.
and they will do business with you a long time. And that is the foundation of a really, really good business.
100%. I mean, that's our that's our strategy right there.
Yeah.
We've done this for 18 years now. We know we're going to be able to deliver on.
Yeah.
When you talk to my team and you're thinking about investing with us, we're going to tell you what we know we can do. But as our data has shown with our client performance, and we've generated over $300 million in profits to clients over the last 18 years. I can guarantee you that we did not put in the estimates that we were going to generate $300 million in clients, $300 million in profits to those clients, right?
Yeah.
If we can just deliver and just do what we say we're going to do, call it almost every single time,
Yep.
and we leave ourselves this little room for surprise and delight, and you do this over and over and over. It's every time that we talk to, somebody and we say, hey, listen, we're going to get this deliverable to you on Friday. If we can get it, and we really think we can get it there on Thursday, we're going to tell you Friday. We get it there on Thursday, right? You buy the house, you buy your JWB investment property, and we tell you that it's going to come in at $13.50 for rent. And meanwhile, we're advertising it for $13.75.
Yep.
And we think we really have a chance at $13.75. You're in the process of closing on the house. You get a call from your JWB portfolio manager, and we're saying, hey, guess what? Not only is the house rented,
Yep.
but it's rented at $13.75. This is what it does for your cash flow.
Yep.
You look and you construct your entire relationship, especially in the beginning with a client, and you just stack all these positive wins. And it's not like you have to drive 20 or 30% returns to build lifelong fans and to build a following. You just have to know what you can deliver on. You have to deliver on it consistently. And if you have that opportunity to just do a little bit better over and over and over again, you're going to create this wonderful foundation and trust. And people on the other end, the people who are paying you money, are going to be so excited to get your phone call.
Yeah.
And that's what we set out to do a long time ago. And it's quite simple, but it's really, really effective.
Yeah. And as I think about, the value that we can provide by having this discussion, I think of two things. One is this idea of, if you are building a real estate business, I know half of our listeners are people trying to be like JWB in other markets and stuff like that. If you're building your real estate business or any business, paying attention to what you just talked about, I can tell you from personal experience, will result in a good business long term, right?
Mm-hmm.
Like I've gotten that advice from you multiple times in private. I've seen you say it in rooms of young entrepreneurs. And every single time I'm just like, man, I'm so glad that I'm close to you. I can listen to that. As an investor who is evaluating who they're going to invest with, right? The key things to look for on this client experience thing is, asking other folks if the experience matches the expectations set.
Sure.
But more than anything, what we've learned is you can really understand if a property management company is, well, first of all, this idea that if you're going to invest in turnkey, you want somebody that is also the property manager to be the person selling you the property, because then they can control the experience. And two, you want to work with a property management organization that's set up to win when you win, based on metrics, based on things like, I guess you can explain this pretty well.
Oh yeah, 100%. Well, so just kind of go through this. Again, if we start with what our North Star is, and the customer experience became the thing that we were going to win at, and that's why people were going to, help us be successful over the years. It's because of our client experience. Well, if we realize that property management in-house is the only way for us to deliver on that customer experience premise, well, you guys got to realize the same thing. And whether or not you're thinking about investing with JWB or investing with somebody else, realize that vertical integration leads not just better returns for you, it leads to a better client experience.
Yeah.
Vertical integration in this setting means property management is it is under one roof. It is the same people who are selling you the property are the same people that are collecting the rent so that you have no room for the blame game, for pointing fingers when it doesn't happen. Everything has goal alignment. So we realized that back in 2009, 2010, we officially started JWB Property Management. And sooner or later, people figure it out. Unfortunately, if people don't take this advice and they buy rental properties and have the management outsourced by somebody else, what you see is what we typically see in our country right now. If people have enough courage to even buy that first rental property or go down that route, they typically don't last.
Yeah.
And that's why this asset class gets a bad rap.
Yep.
So, the proof is already there that it doesn't work. This concept of vertical integration in all aspects under one roof, prior to JWB and maybe one or two other companies really pioneering this over the last 18 years, it didn't exist in the residential real estate space. So it's still relatively new.
Yep.
So, but there is no truly passive experience that is built for you to enjoy it for the long haul, unless it's all under one roof.
Yeah. I mean, I think about my construction days and the difference between what you normally consider a general contractor or a design build contractor, right? Like the general contractor is someone that's going to give you an estimate on your home, then is going to price it out to a whole bunch of different trades. And then they're going to, do these things while an architect is telling them, well, this is what it's actually supposed to be like, right? Whereas like these like design build deliveries, that leads to this idea of just like, hey, this window is leaking, and an architect being like, well, it wasn't designed to be that way, and the contractor be like, no, the design is bad, I didn't have good paperwork or whatever, so I didn't know how to actually build it.
Exactly.
While like in design build, it's all, handled in-house, similar to Haskell or, where my wife works. What I think about as like really useful data here for anybody that's wanting to have this experience is kind of like the data points that I'm now teaching in this class for like our affiliate partnerships and stuff like that. This idea that you need to look at the way that the property management company is incentivized internally, and you'll understand what your experience is going to be. Meaning, as you've taught me, most property management companies make 50 to like 60% of their revenue based on tenant placement fees. And that means that, subconsciously or consciously, they're incentivized to sign 1-year leases. When somebody moves out, they're doing pretty good. So like, what's the incentive behind it? Whereas looking for property management companies that align metrics around length of tenant stay, around renewal rates, and around occupancy in general is really, really crucial. So JWB signs a minimum of 2 and 3 year leases, have an average resident stay of 4.5 years, have a renewal rate north of 70%. And that just means as an investor, my experience is going to be better, because when I think about a turn coming up, I'm thinking about 2 months of lost rent, and I'm thinking about $4,000 and like little things that I've got to do to the house to get it ready to go, which leads to $6,000 out of my pocket. And if I only have to do that every 4.5 years versus every year or 2 years, that's going to drive what we realized was about a 20% swing in ROI, something like that.
Yeah, if you're only getting 1 year tenant stays, your actual maintenance costs are going to be about 30%.
Yeah.
And, as we have seen in some of our pro formas, when I compare what everybody else offers as maintenance costs and percentages in their pro formas, sometimes providers put $0 as their maintenance expense or 0% as their maintenance expense. So there's a huge swing there if you're only signing 1-year leases. When you sign multiple year leases and you have a renewal team that is there to renew at a high rate, and you have an average duration of resident stay of 4.5 years, that's how you get to maintenance expenses of 4 to maybe 7.5%, which is what we have here at JWB. But the problem is everybody else claims somewhere like 5% for maintenance costs generally, but they still sign 1-year leases.
Yeah.
That's the missing piece. And ultimately that is what leads to poor experience for you as an investor. And again, that's what leads to this beautiful asset class not having a seat in the table of portfolios for investors in this country.
That's expectations not matching experience, right? Which is the source of misery.
Yeah.
All right. So that's customer experience. I knew that we'd have to do a real deep dive on that one. The other 2 key insights: data-driven decision-making and building strong brand and community. Data-driven decision-making, GC, when I think of that, I think of my favorite topic here, which is the data flywheel. But you kind of thought about it differently when I first said data-driven decision making. What do you think when that happens?
Well, it all has been driven from the data flywheel,
Yeah.
but I thought of the most immediate here and now is just being able to see how our clients are performing in real time with their investments. And even this year, we made some really great updates to our reporting for our clients.
Yeah.
So it's wonderful for the clients, for all of you clients. I'm sure you've seen it now, the updated and new client ROI report. It's a great experience. But what it also does is it's made it easier for us to data mine and see how we're winning for all of our clients. And that's where we were able to pull out, listen, we have 2 clients that have made over $2 million in their JWB portfolio, right? We have
in this community.
Yeah, exactly.
Right. Yeah.
And we have, 160 to 180 have made over $500,000, and we've made over $300 million for our clients, and you got to realize those numbers are staggering. Our clients are regular, everyday people.
Yep.
We do not serve big hedge funds. We do not serve institutions. We serve Pablo and Marta, who I love dearly.
Right.
We serve you. All of you are such an awesome community because of who you are. We are regular, everyday people that we are creating this financial stability and this wealth for, and a better retirement account many times for. So when I started to think about data driven, that's where my first thought went. But it wasn't always that way, right? So we actually started to create this data flywheel back in 2011. It was a crazy harebrained idea that I brought to the guys. And I was like, guys, listen, here's one thing that's lacking in this industry is any accountability. And even if a potential client works with a turnkey partner out there, and even if that turnkey partner is realistic in their pro formas and delivers on the promises and all that, there is no way for that client to say 3 years later, 5 years later, 10 years later, how am I doing? There's just no way.
Yeah.
Rental properties are somewhat complex. There's a lot of money coming in from here. There's money going out the door here for insurance and taxes and maintenance costs. And there's just nothing built that way. But I said, if we don't come up with an accountability structure, our clients aren't going to know how well we're performing for them. And it will separate us from the others in our space. But it has been a labor of love. And in 2011, I didn't realize how difficult it would be to be able to track all of this. At that time, we probably had 300 or 400 clients at that point. And to think about on a quarterly basis, to understand the flow of money across every property that we're managing, and the things that don't always fit into the box, and how do you create systems to do that? It's been a real undertaking.
I bet.
But we stuck to it, and it wasn't easy in the beginning. But now, listen, it's 2024, so that's 13 years now, data. The ability for us to make data-driven decisions that are in your best interest as a client and in our best interest as a business is one of our key advantages, and how I have so much more confidence when I come to you and tell you how we can deliver for you, and how I have so much more confidence in our business overall. And you just don't see it anywhere else in the turnkey space. So that data flywheel has served us even more than I could have ever imagined. And I'm glad that we stuck our necks out there and tried something new.
Yeah, man. I mean, I'm not surprised of how valuable it is, right? If I was to me, it's like there's 3 ways that I think about the data flywheel in terms of value. And I'm going to do it in reverse order of like what's most important to probably our listener right now to what's most interesting to me. One is, and when I teach this thing, it's this idea of, if you can't have instant access to your dashboard and know where your money is, you're gonna feel insecure. We're so used to having online banking. Maybe 2011, I didn't have my Bank of America app that I just like whipped out and like looked at it all day long. But now, 13 years later, we're just so used to like having access to what our checking accounts and our savings accounts look like, and our stock portfolio and all these different things. And if you are going to, and we can look and see how many minutes until my pizza gets delivered, right? Like we're just completely used to like just knowing stuff instantaneously. And if you can't match the speed of like society, you're not going to create a good experience, right? So it's kind of how I explain it these days. It's like you need a business that's functioning like Amazon to make you happy. enough to stick with them for 20, 30 years,
Mhm.
right? Two, I think about the actual ROI piece of it and this idea that you have 6,000 properties all within the same area, allows you to widgetize something that nobody has ever widgetized before, allows you to get bulk pricing for construction services and construction materials, which means that my maintenance rate goes down, which
Mhm.
means that my amount of time that a resident that I have that I'm hoping stays there for 4 years, like everybody else does,
Mhm.
goes from my toilet broke to I can pee in it again. Like it's just a big deal, right? Like, so that to me drives, the first one drives satisfaction. The second one drives returns. The fact that it is this like compounding advantage
Mhm.
of being able to like operate really, really well. And the third one to me drives long-term peace of mind. Like it's when you say I brought this to my team in 2011, I'm like, oh man, I remember reading Good to Great around like 2008 and like Jim Collins' book talking about how these companies that go from good to great have these certain qualities, and one of them is a data flywheel.
Mhm.
And the idea that if you're going to be an enduring company and you're going to stick around for a long time, you need to be investing in compounding advantages that allow you to like, win more and more for yourself and for your clients. And if I want to invest in a home that I want to own for 20 to 30 years, I want to do it with a company that I feel is going to be around for 20, 30 years.
Mhm.
So as a business nerd, when I hear data flywheel, I'm like, these guys know what the F they're doing and they're going to be around for a while. So like, take my money.
Yeah. Well, we didn't call it the data flywheel until you came on board 4.5 years ago. So there's just value in having it being, I think a lot of the things that we do at JWB, sometimes we just operate off of feel,
Yeah.
and as objective as we are and how we want to keep our investor hat on at all times and make, objective decisions. Sometimes you just feel where there's an opportunity to do something and you don't exactly know how it's going to work.
Yeah.
That's what I felt with the what became the data flywheel with our client reporting. That's what I felt when, the idea of basing your business based on customer experience
Yeah.
in residential real estate investing was there. There's not always data out there to say, well, this is definitely the right thing. But sometimes, especially for big ideas, you go off of feel and you iterate. And, luckily and thankfully, we've been here for so long that iteration, that iterative process, that constant curiosity leads us to a place now where, we have something really great.
Yeah, man. I think it's amazing. And I didn't realize. So you didn't call it data flywheel until I started calling it that?
We didn't.
That's really, really funny. Because I look at Tara and like she is mother of flywheels to me, right? Like
No, that's all you.
Like to me, it's just like it was born and raised out of flywheel. I just got here to be the uncle. That's really, really funny. Okay, cool. So then last of these three insights is this idea of building a strong brand and community, for which I do take a lot of credit for, right? Like I remember, our first conversation when you're like, all right, man, I realize that I hate making content, but I know I have to make content and I need a better way to do it. And we're sitting there at Hoop 303,
Yeah.
right? Is what it's called. And I'm like, Greg, I honestly think that we need to be talking about, I think the first thing I said was like about how many people surf in Jacksonville because it's cool and everybody like likes to associate themselves with it. And all these Prudential commercials are like old guy surfing that doesn't actually surf, and that really happens here. But the other thing I remember saying is, man, I think that the number one thing that's going to make people comfortable in understanding the asset class has less to do with a really good presentation around numbers and more to do with seeing other people that they admire, other people that they know are smart, that are like them, doing this thing that they want to do and succeeding with it.
Mhm.
And this idea that I remember when I first started fiddling around with real estate, the thing that held me back was saying, oh, I want to do this. And then 3 out of 4 people being like, are you sure you want to do that? Because at the end of the day, it sucks.
Mhm.
And it was real estate.
Mhm.
So this idea that building a strong brand and community to me is twofold, right? It's number one, a brand to me like equates trust, right? Like if I know that my Nike shoe is not going to give me back pain,
Mhm.
right? Because it's such a strong brand.
Right.
But at the end of the day, the community thing is this context that is so hard for like one company to provide themselves, of just like, is it right for me? And at what point? It's so much easier to just like see it in other people.
Mm-hmm.
And if we could surround other people with folks like them that would allow them access to like, hey, does this really work for you? Which is really what's happening in the chat right now, which is what I find fascinating, right? Like Lee and Michael and Danette talking about like like talking about this like 3-year leases that they're signing and like the success that they're having, right? And April, who's new here, being able to like ask them directly what's going on with them and them giving each other's phone numbers. Like there is no better way for someone to be like, man, I know this to be true, but I want to see it to believe it, than creating this community thing, man.
I mean, it has been one of the most amazing things that I've ever experienced in my career.
Agreed, yeah.
And
Yeah.
just to think of the quality of people that we have in our community.
Yeah.
And we're not even just talking about, success in real estate, the quality of people that we have, the character, I mean, every time we get together, whether that's at the summit that we had in February or when we're all getting together sort of around the country, whenever you go to a place.
Jen's talking about driving down to Orange County, San Diego and meeting up with Reggie right now in the chat.
Exactly. I mean, I've even seen things in meeting overseas when people are in different countries. Yeah. So anyways, just the quality of people who take time to be here, I never take for granted. And if you had asked me and Pablo 4.5 years ago, if we would have the number and the quality of people that truly are here for the right reasons, I never knew it could be possible. So that always blows my mind. And then the access to people, like you said, who have achieved greatness in rental property investing and have that special space every Tuesday to be able to interact with them. Mm-hmm. I mean, we talk about how there's 180 folks that have made over $500,000 in rental property investing. Well, there's a whole lot of you that are in that chat right now, and I won't call you by name, but I see you there, right? So especially if somebody who's newer, to see that success, to be within a conversation of that success is amazing. I always wonder, like, what was the special sauce that like came together for this to be successful? Because to me, community is something that it's really hard to create. I think people can create fake communities pretty easily, but like, what is that? And then they fade and they're there for a minute. Like this has lasted, this has grown organically. Like, what's the special set of circumstances that came together for this to stick? Mm-hmm. Maybe that's a great question to ask all of you in the chat. If you want to throw in, what about this makes you want to be here every Tuesday? I think that would be a pretty cool thing. What do you think?
I mean, I got a theory about it, man. So my initial theory when I came to you, I was like, hey, Gregg, I bet you that all your clients are these like really interesting, like entrepreneurs and folks that have like done all this, like business stuff, and we're going to be able to talk about business. And while I was directionally right in the fact that everybody was like interesting and had a common goal and all these different things, it's really more obvious that it's mostly W-2 investors that just look at the options of the things that they've been handed down as beliefs and think to themselves, I don't get it. Why am I crazy here? Mm-hmm. And to me, the common thread is this idea that we're all folks that have like looked at the status quo and said, not good enough for me. Mm-hmm. Like I want to do a little bit more. Mm-hmm. And I think the type of person that does that across many vectors in their life, right? Like we just happen to be in the vector of saving for retirement and financial independence. Mm. But as I look across our community, it is a common vector to approach to relationship building, mm-hmm. approach to long-term thinking and career and sustainable mm-hmm. success. And like all these different things. And it doesn't necessarily need to be entrepreneurial or W-2 or in a certain career or whatever. But everybody here kind of marches to the beat of, has a strong internal compass. And I don't think that that's normal, right? So like, I think when you get here and you realize that it's clear. So that is the character that you find here. And it really only works when you have proven that is like the evangelist, the person that's the leader of the community mm-hmm. has proven over and over that they have similar core values and similar beliefs. So like, I think that what I didn't realize is just how much you and your team has for the last 17 years, marched to the same drum of these folks, right? Like you guys saw a real estate industry that everybody was doing it one way and just immediately started zagging and finding value in the zag. You started seeing a mentality that in a lot of rooms is very transactional and started thinking of it relationship wise. When 2006 happened and everybody freaked out, you guys made sure that you paid everybody back at your own personal cost. And you have continued to do that throughout the years to make people whole when it's not their fault, whether or not it makes financial sense for you in the short term.
Sure.
So I think it's the combination of those two things, man.
It's interesting because there's certainly like a like-mindedness. If you look at some of the moves that we made early on,
Yeah,
we had a not your average approach to whatever that problem was, and whether that was how we were going to handle the Great Recession or leaning into rental property investing when others, clearly weren't as excited about it as we are, or any challenge along the way. So we have that streak of being a not your average take on the situation.
Yeah.
And that is a common bond that we see here in the, so.
100%. And listen, back to these same exact three key insights: enhanced customer experience, data-driven decision-making, and strong brand in the community. Charity is saying being transparent, temperate, and your value system and honesty is how long it, how long it will take to achieve lasting wealth. That's what keeps Charity coming back, right? So
Very
that's
cool.
like, that
Thank you.
represents exactly what we're talking about, right? Like data-driven, transparent, right? Like customer experience, setting the right expectations, doing all those kinds of things, man. So
this is great. Look at some of these responses. Thank you, guys.
yeah, really amazing responses,
mean-
right? I'm here for the positive learning and encouragement that I have made the right choice for my portfolio and get encouraged to continue to grow my portfolio, building generational wealth. Strong brand in the community. Right? Like,
Thank you, guys.
It's really cool. It's really, really cool. So, those are the three key insights. I love kind of like going backwards and like distilling what has worked for JWB, what's working now for folks to try to, obviously, if you're going to invest in Jacksonville and real estate, and we believe that Jacksonville is a great real estate investment, we want you doing it here, but we recognize that people are going to invest in all sorts of different things. If you can start to pattern match, if you can start to pattern recognize, right? Like if you can ask questions around enhanced customer experience, what are the metrics, like how do you win when I win? Talk to me about how you set expectations versus meeting them. Those kinds of things is going to help anybody. Talk to me about my dashboard and how I can make data-driven decision-making. Talk to me about how you make data-driven decision-making, and having those experience. And at the end of the day, the thing that you really can't fake is the community, right? Like if you're doing business with someone, like, I think about who are the guys that are doing downtown with you guys.
Gateway,
Not DLP,
Yeah.
right? Like I look at DLP, they're in a different asset class, but it's, and they don't have a weekly internet talk show, but they're also event and community driven. Right. And they've also
core values,
right?
Very big
Like,
in that.
yeah. And as I, spend more time in this world of real estate, talking to other companies, because doing this here has made me kind of famous. Like it's very easy for me to start to recognize, hey, are you guys doing this? Is this in your DNA? And I think as a consumer, it gets easier once you have the model for it.
It's interesting that like the third part there, building a strong brand and community, almost is like a prerequisite for doing let's just say doing important business, right? When I think about how you're building for retirement, that's a prerequisite now, because it is much easier to be able to build a community today than it was 10 years ago, 15 years ago. It necessarily wasn't a prerequisite for me when I was starting 15 years ago, 18 years ago. But that evolution now, it probably is,
As I say often, the internet is the light.
Yeah.
Right? Like you can't, the more information is openly available and very fast to change hands, the less you can fake the funk.
Yeah.
And you really, if I'm going to give you $75,000, I want to make sure that you're legit.
Makes sense to me.
Yeah. So yeah, man, this idea of building a community is a big thing. So just to kind of like put a button on it, the 8-step framework for success, which maybe we'll do another show on it, but like the 8-step framework that McKenzie describes is defining the vision, understanding your customers, mapping the customer journey, designing the experience, building a tech foundation, empowering employees, monitoring and optimizing, and then fostering community. As I look through those, I think we've talked a lot about all of them, right? The defining the vision, understanding your customers, mapping the journey, expectations and experience, right? Designing experience, building tech foundation, monitoring and optimizing and fostering community. We've beat up pretty good. I think the one thing that we haven't really talked about is this idea of empowering employees,
Yeah.
which to me is the number one, the first thing that I noticed. I was like, okay, this company's really legit. I really want to work here.
Yeah.
You want to talk a little bit
That's
about that?
out of the list that I was like, oh, where do I think that we win the most?
Yeah.
And that was the one that I think we win the most.
Yeah. Why is
Yeah.
that?
Well, it's the way that we treat our people. It's the type of people that we want to bring onto the JWB team. It's, we realize that when we bring the right people onto the team and we have those people making more of the decisions and more ownership of their roles, we all win.
Yeah.
And it's always unique to me to see how the rest of the world works, where, many people want to keep the power at the top when they, want, they're, it's not always easy to be ascending in a role in many companies. At JWB, we are looking for leadership opportunities for our folks. We are looking for decisions that our folks can make.
Mm-hmm.
And as they continue to build up their foundation and they continue to grow in their role, that next opportunity for them to make a big impact on the team is waiting for them. And we've seen it now for 18 years that, first of all, that's more fun. Right? You bring the right people on the team and those people have more fun. And that's why routinely we get to celebrate 10-year anniversaries at JWB.
Yeah.
Where, when you are on the team at JWB for 10 years, the company sends you on a trip, pays for your expenses. So we get to see that. So, and then of course, the way that this relates to our investments listen, there's no substitute for having somebody who is leading this organization in your department, whether that's property management or client service or you name it. To have that type of longevity, experience, talent in the seats that are making those decisions, not named me, not named the owners of the company, that's how we can deliver on the expectations to you over and over and over again.
Yeah.
So couldn't be more proud of the people that we have here. And very early on, our approach to making sure that those folks can continue to drive our business and realizing that the four of us were not going to drive our business for very long once we became established has meant the world.
It is a underestimated skill set and kind of like ability to do it. I think about our conversation this morning, just talking about my own business and like, how do I grow my thing beyond my brain power and my abilities? And it's something that I really, really admire. And at the end of the day, I've talked about this idea that like dealing with JWB is like walking into an In-N-Out or a Chick-fil-A, depending on what coast you live on. This idea that like everybody that you deal with leaves you in a better mood than when you got there is really, really important. I think it ties into the other insights, right? Like, I don't think that you can deliver a great experience without a great team. It's really hard to collect consistent data and compound information without a reliable team.
Mm-hmm.
And it's impossible to build a community without a great team.
Mm-hmm.
So, it all rings really, really true to me. And it was immediately apparent when I went to the first Tuesday morning meeting when you were like, oh, if you want my business, you're gonna have to go to this 1 hour all hands meeting. And I wasn't looking forward to it. And I ended up loving it. I do want to, in the sake of transparency and everything, right? Leslie Wilson has a question. She's saying, can you talk about recent employee turnover? Has there been recent employee turnover? Is that like a random data point that she's feeling, or is there anything about that?
We have 130 folks on the team. So, of course there will be folks that, unfortunately are no longer a part of JWB for one reason or another. But no, there's no spike in turnover. Our turnover is largely consistent year over year. What we really find when it comes to turnover is that our average turnover rates are not that much lower than what you might find across industry standards.
Interesting.
Yeah, this is a really interesting point. But when you look at the type of turnover we have, the turnover that happens within the 1 year mark is we look at that as being an okay thing. Okay, because what we realize is we're going to do our best to bring people into the organization. We're going to do our best to train those folks, but you're never perfect. It's never a perfect mix. It's never a perfect match. And what we have seen over time is that quickly, as long as we can understand quickly if that person is the right fit for the JWB organization and vice versa, then we can make sure that we make that decision quickly. And so where we really win as far as turnover rates are folks that have been on the team longer than a year, longer than 2 years, staying and becoming, tenured, very dynamic leaders in the organization. So no, to answer your question directly, Leslie, there's no spike in turnover recently. We have it,
That's an
every so
interesting,
often.
that's an interesting nuance. So you guys have a typical, like generally standard turnover rate for companies, but the difference is that in under 1 year, it's normal, but then the people that stick around here stick around a really, really, really long time.
Yeah, exactly. We
Yeah.
actually, when we look at our turnover in business planning every year,
Yeah.
we look at it and we say, okay, what's the amount of turnover that we've had overall? And what's the amount of turnover that we had in the first year? And we go through everybody that has left our organization and we understand, okay, what was the reasons driving that? What could we have done better as an organization or
Interesting.
vice versa? And what we generally find is that it just wasn't a good fit for whatever reason. And we look at that and say, okay, if the organization and the culture and that teammate figure that out
Yeah.
early,
Yeah.
then it's actually a win for everybody.
Yeah. It's like the buffalo herd mentality, right? Like if the least happy buffalo leaves, it just leaves a nucleus of happier buffalo, right? Like, and
Okay.
if you figure that
I'm
out.
trying to take that one in. I haven't
Yeah.
heard that one yet.
Well, yeah, no, you figure that out year one, right? Like
Yeah.
if the opposite would be people that are, I'll say it differently. I've heard the business insights of the moment that you hire a B team player, then you start getting C team players on your team,
Mhm.
right? And this idea that everybody here is an A player, the moment that somebody comes here and they don't necessarily fit in to like the values and the culture and aren't a total buy-in, you're able to identify it in year one. And that means that like you no longer have the Z, right? Like the person that's pulling against the herd
Mhm.
here long term that gets to build a compounding gravitational force against it
Mhm.
versus you come here within year one, you understand it, you move on, you find a better place that you're going to be happier in.
Yeah.
And at the end of the day, everybody in this building is happy. And it also makes me think that, for a company that's gone, when I was here, you were about 70 people
Mhm.
and you broke 100 maybe like a year or two ago, and now you're at 130, it would make sense that because it's grown so much that amount of year one people is higher than it was before, and therefore Leslie feels
Yeah.
that could be the thing.
Yeah.
Yeah.
It's, turnover is going to happen, but I will say that one of the things that we really care about is not impacting the client experience, even though turnover will happen. So just in the last year to 2 years, we've implemented even more strategies so that if your teammate leaves that you've built a relationship up with, there are other teammates that have similar relationships with clients. So we have a pod structure for our client service team, same thing for our residents as well. So, we know turnover is going to happen when you have an organization of 130 people, but how do we do that in a way that doesn't distract from client experience, right? That's what it all comes back to.
Heck yeah, man. It was interesting to dive through that report with you, man.
Yeah.
Glad we did it.
It's good stuff, man.
Yeah. It was super, super interesting. It's been one of those things, like it came out like maybe like a month ago and it's been on the docket for us to discuss, and we've just had other things to talk about, but I'm glad we got to talk about it. It's been a love fest in the chat. Like this week. I think this is going to be a chat that you're going to want to print out and like
Love
read
that.
and show your team at TMMs. But I just want to, tell the community, right? We had like about 70 people here today. Never goes unnoticed that you show up here. And we just really, truly appreciate that you take an hour out of your workday to like spend time here. It's very honoring that you come back and like the things that you all say about it and the value that is provided. I want to remind you, Thursday, we got the special webinar. I know a bunch of you registered, very much grateful for that. Looking forward to that. There is a question from Pedro Santorios before we get out of here. GC, the Fed meeting tomorrow afternoon, rate drop, yes or no?
Nah.
Yeah.
Nah. Has to be September though.
Yeah, that's the common understanding, right? Like
Yeah.
it feels like it's not going to be tomorrow,
Yeah.
but it feels like I saw a report that was like 80%, the sentiment is like almost 100% that it won't happen this time, but like 80% that it's going to happen next month. So that is the common thinking out there.
But again, when the Fed has signaled this,
Yeah,
even though they don't have to drop the rate tomorrow at the Fed meeting,
true.
the market starts to move before. So that's why now is a really important time for you to take a look at your plans of investing in real estate. If you have plans to add properties to your portfolio in the coming months, in the coming years, see what you can do. Get on the phone with JWB. See what you can do now to take advantage of the incentive right now. And also because when interest rates do start to come down, we're expecting home prices to go up. And if you can buy those properties and accelerate the timeline on this, then you'll be able to make more money. You'll be able to take further steps towards your financial future.
And next week, we are, we just talked about all the good stuff, like what's the edge? Next week, we're gonna talk about what could go wrong. Right? Like
There we go.
ROI killers for turnkey rental property investors. I've been teaching this class for another group of folks. We're gonna do like a version of that next week. I think it's gonna be a lot of fun. From now till then, do you see any little bits of advice for everybody?
Don't be average. See ya.
See you Thursday, everybody.